According to the latest report just released by our friends over at the OBR, your house will be worth about £28,000 less over the next couple of years. And to put that into perspective, that's the equivalent of losing almost the entire median salary for someone in the UK. Now, rather than just taking this information, running around with our hair on fire and going into full-on panic mode, let's actually have a look at what the latest data tells us, why they've ended up with this conclusion like this, and let's work out if these forecasts are really anything to be worried about, or if it's all just a load of fuel for some clickbait headlines from the media, like these.
What are we going to do? We are so...
Okay, so here's a bit more of what the OBR say in their report. Remember that the OBR is the Office for Budget Responsibility, and it sits outside of the government. It's kind of meant to be a bit neutral and tell them what they need to know. In their latest report that got released this week, which went alongside the budget that was delivered by Jeremy Hunt, there's 172 pages of information that I definitely did not read. However, I did focus on just the part around households and property, which starts on page 41 for any of you who really want to spend your time reading reports. The key parts in this section tell us that living standards caused by the cost of living crisis are not in a good place. And let me quote you when they talk about the real household disposable income, basically what's left after you pay for everything that you have to. It would still represent the largest 2-year fall in real living standards since ONS records started in the 1950s. The fall between 2021 and 2022 and 23 to 24 takes RHDI, that's the real household disposable income, per person to its lowest level since 2014 and 15. And in 2027 to 28, real living standards remain around 0.5% below pre-pandemic levels. Not good at all then. And then leading on from this, they think that our savings rates will be virtually zero in 2023 and 24, which then in turn puts this pressure on the housing market and especially first-time buyers looking to secure the deposit to get them on the housing ladder. Remember that even if you're not a first-time buyer and you want your house to grow in value, the first-time buyers are critical because they make up around 50% of all purchases, so their buying pressure is a huge part of that overall market. Anyway, leaving that report, I'll let you go through it with a fine-tooth comb if you like and you're really bored. But now let me just take you through the latest data that we get from other sources like Halifax, Zoopla and Rightmove, and they've always got some really good insights as to what's really happening out there in the market. Just be careful with any forecast with anything in the economics world. They can't even tell you what will happen next month, let alone the next few years, so take it for whatever you will. Anyway, let's grab the Halifax data first, and here's the big takeaway points that I think are worth looking at. As you can see here, 5 of the last 8 months have seen house prices fall on a month-to-month basis, but the caveat should be that on the annual basis, we're still seeing them rise. Just not on a huge level as we've seen through the last couple of years, especially post-pandemic. If we take a chart here of the average house price in the country, we can see that we're now past the peak of the summer last year, and we're now trending slightly down, although the crash which many people have predicted doesn't seem to have taken hold, even with all of the speculation and chaos caused by Liz Truss and Kwarteng just a few months ago. Doesn't that seem like another lifetime ago already? Anyway, the takeaway from Halifax seems to be that we're still in a negative trend and not a lot of optimism. Now, on the other hand, Zoopla has a kind of different take on this in their own report. So looking here at some of their numbers, a couple of interesting points come up, with one being that although buyer demand is 20 to 50% lower than a year before, they say that this is a poor way to look at things because last year was such a big outlier that if you actually go back to pre-pandemic levels, we're still slightly ahead in terms of sales volumes. Now, another thing that's really interesting though, I think the key thing in this report was just houses are selling, but the difference now between what people are asking for and what they're accepting is now really starting to spread out a bit. Here you can see that the average asking price discount is around £14,000, meaning that buyers are in the driving seat when it comes to negotiating those deals, and those sellers are having to suck up a bit of reality when it comes to the real value of their houses right now. This is actually the highest it's been for 5 years, as you can see here. It's really interesting to see how this continues as we get more data in the next few months. And as usual, if you do enjoy these kinds of videos, please do let me know below, drop me a like too, and let me know your current experiences if you're in the market right now and what you're going through. We always get some good insights below, so don't forget to join in the conversation below. Anyway, going back to the report, although prices might be sliding when it comes to getting a sale done, there's still plenty going through. And one thing I thought was really interesting was the regional differences that they've seen here. If you have a look at this graph, here is where the action is really taking place in the market. So apparently we all now want to live in Scotland and the North East, and then there's a lot less taking place in the East Midlands. This suggests that people are looking for bargains in markets which still have many more relatively affordable houses, and also I'd probably guess that with the rise in remote working, as long as you can get an internet connection, you're going to get a lot more quality of life up in somewhere like Scotland compared to London and the South East. Although just a word of warning, you will need to bring your big coat. I went to uni in Newcastle and I can confirm it gets a wee bit chilly up there. Now, onto other key points. Buying power comes up in this report. And as we all know, that big word affordability rears its head again. As you know, this is key to the housing market as those first-time buyers need houses that they can actually get a mortgage on to start their own journey. Now, when I did a video a few months back, we were staring down the barrel of almost 6% interest rates on mortgages, making them extremely unattractive and completely destroying lots of people's hopes of getting a new home. Thankfully, since that date, we're now looking at rates a lot more competitive. And if we look now, we're seeing rates around 4.5%, which Zoopla reckons is a lot more manageable and realistic as the lenders now compete for your business. A couple more takeaways from this report. House price growth in affordable areas outside of major cities still remains strong, and they highlight areas like Oldham, Dudley, Wolverhampton and Worcester having 8% gains. And then on the flip side, London loses out, but then their house prices were already in a different league entirely. An interesting report, I think you'll agree. The market's still moving, people are having to accept less than they ask, but still no signs of drying up just yet. Are we really heading for a 10% decline in house prices, or is the OBR forecast just some meat for those headlines? And thumbnails. Well, let's take another set of data before we weigh things up and come to some kind of conclusion. Heading over to good old Rightmove, everyone's favourite site to look at £1 million houses and imagine how long it must take to clean the house on a Sunday. Surely it can't be me. Please tell me that you think the same things. Anyway, they echo a lot of the comments from others that we've just seen, saying that they think first-time buyers have been a lot more resilient than they'd expected, especially because they're buying the affordable homes on the cheaper end of the market. Now, on the higher end, they are saying that there is weakness there, as that's more of a discretionary spend. God, imagine having to dust all of those rooms. Now, here is one interesting thing which the other reports don't have. Check this one out. Average number of days to secure a buyer is now the highest it's been for a long time. And if that trend continues, I wonder what we can take away from that point. Are people shopping around more and more, being a bit more picky, or are some sellers still pricing too high, not being realistic about the current market? A really interesting one, that one. But to contrast this, stock remains stubbornly low. As you can see here, stock per agent suggests there's still very little supply on the market, which by the basic nature of supply and demand will keep those prices pretty high, as we're either just never building enough houses for the wider population, or also people who don't really have to sell are just sitting back and waiting for this all to blow over. The report does have a lot of the same points in the previous one, so I won't bore you with saying the same thing twice, but just on that point of affordability, I know a lot of us will see properties that look way too pricey, and if you take the average salary and multiply it by 4.5 times or even 5 times, you still can't afford a house. However, the interesting thing to note here is that if you're buying as a couple, your affordability on this yellow line is way above what you actually need from the line below. Now sure, if you're buying as a single person, then houses look out of reach, as the average individual shown in this line here just can't get enough together unless they had some massive help from the bank of mum and dad or something like that. And just because I'm a total nerd, I wanted to look into this a little further and see how many people are buying as a couple. Is this now becoming more of a common thing? Should we measure affordability slightly differently? Because let's be honest, we can't all live alone in a single house, there's just not enough space. Now, funny enough, heading over to some data collected by BuiltPlace, they grabbed Bank of England and FCA numbers, and we can see that joint incomes, this blue line when compared to the red line, which is single incomes, seem to be the way forward when buying homes. So I just thought that was quite interesting to look at, because we often think that buying a house is an individual sport, but actually it looks more like a team one. Now, just quickly on a complete tangent, look at this yellow line. Here's mortgages given to people with no evidence of income. No wonder things got crazy just before we had the global financial crash. Imagine giving someone a mortgage and almost 45% of people getting one without any evidence of income. Those were the days. Almost as bad as running a bank and using all of the depositors' money and only buying long-term government bonds on super low interest rates. Silicon Valley Bank. Pardon me. Okay, so 10% crash in house prices next year. What do we think? As usual with predictions, making a call on the future about something like this is almost certainly going to end up wrong. The only thing I can add to this debate is to say that it all depends what you want and need at any given moment. If you have to buy a house and you have to move, then you haven't really got much choice and you'll just have to deal with the hand you're dealt and grab those interest rates as they are. But to be honest, 4% or so really isn't that bad when you look super long term. Unfortunately, we were spoiled for way too long after the financial crash when rates were really low. I mean, my own mortgage is something like 1.7%, fixed for another few years. Also, if you're buying a house because it suits your needs and it's good for you and your family and you're going to live there for maybe decades, then I personally just say ignore the noise and just go for it. We talk too much about the value of houses as if there's some golden goose money-making machines, but really we need to enjoy them as well, and remember that there's value to be had by having a roof over your head and somewhere decent to record your YouTube videos. I mean, it's not too bad. We might have grown a bit too used to property always going up above inflation and treating it like a piggy bank, and although that could still be the case, don't forget to enjoy the ride, and I've got no doubt there are bargains out there to be had. Now, when are we all going to move to Scotland, and can someone find me a castle on Rightmove for under £300,000 that looks easy to clean on a Sunday? See you in the next video. Happy investing.